I've been trading CPI for over 6 years. Here's everything I know in 60 seconds. CPI data is just a piece of data that tells us whether the costs of things are going up or if they're going down. Some of you guys might know this as inflation. Now, the reason inflation is so important is because the Federal Reserve uses this as their guide to make their decisions on interest rates. Typically, when we see inflation going up, they will raise rates. But when we see inflation dropping, they will lower interest rates. And the reason interest rates are so important is because it's one of the main drivers of the markets. Look, check this out. So in 2022, the Federal Reserve started hiking interest rates, meaning interest rates were going up. The US dollar was pushing up because of this. Gold was dropping because of this for the whole year, and NASDAQ was dropping. But 2023, the Federal Reserve started cutting rates. Look at the direction change. The US dollar dropped, gold started pushing up, and NASDAQ started pushing up. We have two completely different directions here, and the only thing that changed was that they were hiking rates at the top, but they were cutting rates at the bottom. So when you're trading CPI, the question that you want to answer is not how will CPI impact the markets, but rather, will CPI impact interest rate expectations? If the answer is no, usually there's no tradable move from this data. But if the answer is yes, then the next question is, are higher rates or lower rates bullish or bearish for whatever it is that you're trading? And just as a rule of thumb, higher rates is typically good for the dollar, bad for NAS and bad for gold, but lower rates is bad for the dollar, good for NAS, good for gold.